Welcome, everyone, to another one of your episodes over here in the Warriors Group podcast. My name is Albert Ramos, and today we are with our CEO and broker, Maurice Watkins. We've had him in the podcast, obviously, a couple of times now, because he is the true knowledge person in our group to answer the questions that we're going to have in our podcast today. And today we are going to be dissecting and breaking down the VA loan to the most common denominator, how Maurice like to calls it. Okay, so Maurice, how are you doing today?
I'm good. How you doing, man?
I'm doing great. Thank you for coming back.
I appreciate it. I appreciate the invite. Got an invite by all, but I got to show up.
So today we're going to be talking about the VA, right?
Uh-huh.
And the VA or the VA home loan, right?
Yeah.
We've talked about it in our podcast before very briefly, but today I want to do a deep dive in the actual loan. Okay,
we're going to break it down.
We're going to break it down, right? Because obviously when as real estate agents, we do this every single day. So we know what these things are, right? But I want to break it down to the most common denominator whenever it comes down to some of the aspects or some of the things that will affect a VA home loan and will affect our service members whenever they're applying for a VA loan.
Got it. Well, hit me with it. I'm ready, baby.
Okay, so the first thing that I have, is the VA funding fee.
Yeah.
Okay. What is the VA funding fee?
So the VA funding fee, I don't know if I look at you or look at the camera, right? But, so the VA funding fee is basically 2.3% of your loan, right? So let's use simple numbers. Let's say you want to buy a house for $500,000. 500,000 times 2.3% equals, I don't know, $11,500 or whatever the math works out to. So the VA funding fee is something that's rolled on top of your loan. So instead of you borrowing $500,000, you're going to borrow $11,500, right? And to speak to your next question, because that was like two questions in one question.
Yeah.
The reason the veteran pays the VA funding fee is because in the event of default, and sometimes you do have veterans, unfortunately, that default on their loan. In the event of default, there's a big pot of money that they use and the VA uses to pay off 25% of your house for you if you ever default on a loan. So in that scenario that I presented to you, if you buy a house for $500,000, the VA is saying they're going to come in with $125,000 to assist you in paying that house off.
Now, I've had, especially here in California, I've had service members that tell me that there is another type of loan out there that will give you money, right, in order for you to utilize. But it's kind of like a loan on the second loan, which you will have to pay within 5 or 10 years, right? They tell me, why should I utilize the VA loan and not that other loan?
Yeah, I would have to know what that other loan is. What's the name of that?
So I can actually look it up here while we're talking about it, and then I'll let you know the loan so we can revisit
because I'd be
this
interested
question.
to hear that, because if it's not a home equity line of credit, in other words, a HELOC or a cash out refinance, I'd love to hear what that loan is and what they're trying to compare it to, because hands down, a VA loan is the best loan in the United States. You heard it here, right? It's one of the best loans in the United States. You have some that are almost equivalent to it, maybe an FHA, but you're still coming in with money down. But I haven't seen anything better than a VA loan out there.
Yeah, and can you roll? Because you said, right, and I think this is what confuses a lot of people, right? Because I've had clients that come up to me and say, "Hey, Albert, you told me it was 0% down. Now we bought the home for $500,000, but my loan is for $512,000. So what's going on with that, right?
Right.
Like, can you roll it into the loan?
Got it.
What's the difference in between the down payment and the VA funding fee?
Okay, so the question is, can I roll a VA funding fee into the loan, correct?
Yes.
Okay, so yes, you can roll a VA funding fee into the loan. I say 90% of people choose to roll it into the loan because the difference in your payment based on today's rates. Oh, and by the way, today rates went up 0.75% based on the feds, right? But based on today's rates, if you roll it into the loan, you're going to probably pay an extra, I don't know, $70 a month or something like that, depending on how much you purchased the home for. So yes, you can roll it into the loan, and most veterans choose to just roll the money right into the loan. So.
Yeah, and when they do that, right? How does that affect the loan?
It just adds more money to the loan.
Okay, so it's just instead of you paying that $500,000, right? You're paying $512,000.
$512.
And I just want to make sure that people understand this, right? Because it's just about being as transparent as possible, right? So on average, it adds 2.3. Not on average. That's like the hard number, right? It adds 2.3%.
Correct.
Okay, got you. Okay.
Right. Now, I do have more to add to that. With that being said, now adding that $12,000, remember that $12,000 is going to be paid over a 30-year period. So now you're paying interest on that $12,000. So some people say, hey, you know what? I'll just pay that out of my pocket because I don't want to pay any more interest. Some people say, you know what? I'm going to refinance this house anyway or sell this house. I'm not going to have it for 30 years anyway. So might as well let the bank pay for it, right? Then I pay for it over the next 6 or 7 years. So it's totally your option, you know. So at that point, that's when you just kind of lean on your wife or lean on your husband and kind of make that educated decision about where you guys see yourselves in your 5-year or your 10-year plan.
Got you. And I'm pretty sure the people in the comments are gonna let us know. I can't find the loan right now. You see what I'm saying? I'm gonna look it up and we can roll it. Yeah. We can roll it after we edit the video, whatnot.
And I come back.
Yeah, exactly. Right. So and I'm pretty sure if you know what the name of the loan is, please let me know. I'll look it up in the messages that my client sent me. Got but yeah,
was it Calvet?
I don't think it was the Calvet. Yeah, I don't think it was the Calvet. Okay. But we'll revisit.
Okay.
The second thing that we want to talk about is going to be about the VA appraisers.
Got it. Okay. VA appraisers. That's a tough one.
Yeah, that is a tough one. Yeah, why, in your opinion, is it a tough one?
Because, everybody's always got something to say about the VA appraiser, right? They don't have good names all across America. Here locally, I think they're pretty decent and they got a pretty good name. But if you go in places like Michigan, Ohio, a lot of places in the Midwest, a lot of places in the South, a lot of people do not like accepting VA loans. Right? Yeah.
Wait, a lot of people don't like accepting VA loans.
Right, that's correct.
Because
the VA appraiser, when he comes out there, they think that the appraiser is going to be hard on the seller of the home, right? The house might be a 1935 house, right? It could be an old house, 100 years old, almost 100 years old, and the appraiser might come in and say, nope. I want you to fix the back porch. I want you to fix the front porch. I want you to fix the inside. Oh, by the way, there's termites. Next thing you know, the seller's got to come out of $40,000, $50,000 just to fix the house. Yeah. So a lot of the times, especially with older homes, people do not like accepting VA because they don't want to fix the property.
And right. I've even had here in California, I've even had people that have straight up told me, and it's like, I don't want to be stuck with a low appraisal,
right?
Because that affects. And whenever I'm going through a transaction, that's like my point that I know I'm gonna be like, oof, like to relax,
right?
Because the VA appraisal can come and say like, hey, guess what? You're $10,000 short. And then now, what happens when you're $10,000 short?
Exactly.
What happens when you're short is that your buyer has to come up that $10,000. So I want to make sure that people understand that, right? But what is the VA appraiser's main job?
The VA appraiser's main job is to protect the veteran, right? It's protect the veteran. I love the VA appraisers. Any house I buy because the VA appraiser is going to come out and they're going to negotiate for me. Not negotiate, but kind of look at the house and make sure there's no issues with the home. And if there are issues with the home, they're going to pretty much enforce and insist that the sellers either fix the problem or they cancel the contract. So
I got you.
Yeah.
And how long from the moment that the process starts, escrow gets open, how long does the appraisal usually take?
Okay, so if you're dealing with a good loan officer, right? If you're dealing with a good loan officer, the first thing that happens is the first day that you go in contract and you have a fully executed contract, the loan officer should be ordering that appraisal. From that day, the inspector has 10 days to do an inspection and get the report back to us, right? So you have two things that need to get done in 10 days. And on that 10th day, it expires, right? So we want to get that back immediately because a lot of the times these people want to do 12-day closes, 17-day closes. Well, guess what? We can't do that without the appraisal, right? Yeah. And to add to one of your points that you just mentioned, you said, hey, the buyer's going to have to come up and cover that extra $10,000 that they have to pay if the appraiser comes in short, right? Not always true. A lot of the times the seller, they'll come back down and they'll negotiate the price and bring it back down to what it's actually worth. Because why are you selling your house for over the price? You should be selling your house for what it's worth. Right?
For the max value of
your home.
Value
of
your
the
home.
max value
of your home. Now, does the veteran has to pay anything? Or the service member have to pay for the appraisal? Yes,
good question, right? Because a lot of veterans think they don't have to pay for the appraisal. Yes, the veteran does have to pay for the appraisal, and currently here in California, the appraisal is going to cost them $700. Just went up from $600, but now it's $700 for the appraisal. And most of the time, the buyer is going to see that on the back end as one of the fees that happened during the contract. So
now, let's say, let me put a scenario, and please, by all means, share if you've had this ever happen in one of your transactions, right?
Okay.
Let's say, a couple.
Yeah.
Let's say a dual. Let's put the actual, an actual thing. let's say a dual military couple. It's loves a home. They're super qualified for a home, right? They love this home.
Yeah.
And they want to go, let's say, $10,000 over asking.
Yep.
You know, just because that's the home that they love.
Right.
The appraisal comes in, and it's at value of the home. It's like, hey, the home was listed for $570,000. You got your offer was $580,000.
Right.
But you want to challenge that. You want to be like, no, I think that, and there's actual data that it supports that the home value is $580,000. Is there a way to challenge that?
Absolutely. So basically what happens is they actually send you the paperwork to challenge it, right? So with that paperwork, you fill out that paperwork, you support the paperwork with comparisons in the area, as well as sometimes they want receipts as well about all the upgrades that you may or may not have done to the property. They want those receipts, and you challenge it. And I'll tell you, I've challenged several of them, and I would say 75% of the time I win the challenge. So don't be afraid to challenge these appraisers out here, because it doesn't end all be all right there. And I say a majority of the time they're going to agree with you as long as you have your factual data in place. So before that agent offers that 580, one of the things that agent needs to do is they need to do their research as well, right? They need to do their research as well and let the client know, hey, we might be able to squeeze 580, and if the appraiser comes back at 570, this is how we're going to get that 580. So you have to be prepared when you go into contract with somebody. I
think there is a lot of experience within our group with this happening, because obviously we just came from a market, right? That there was people waiving contingencies, and there were people doing all kinds of stuff. And one of the biggest ones was that the home would not come in at the actual offer price.
Right.
So it came in way below that.
Exactly.
So we have a lot of experience. So I think that's one of the biggest things that you need to do is you need to reach out to this information that's down there below right now. If you are having this issue, reach out to one of us, and then we'll gladly help you out. And you said, we were talking about it earlier. It was about how is it that sellers discriminate.
Yeah.
Discriminate, right? And I think this is an unspoken topic in real estate, right? Because a lot of the agents, I would say 97% of the agents are out there. The VA loan is just one of the loans available out there, right? But for us, for the Warriors Group, this is our bread and butter. Right.
It is,
So we deal with this all the time, right?
Yeah.
So that's why I don't think a lot of people talk about this, because and I would say, right, that even discourages some of the agents that don't have the experiences that we have, right? Because oh, there goes the VA loan. We had a bad experience, right, or whatever.
Yeah.
But my question is, why is it, right? Like, why is it that people, in your opinion, of course, why is it that they discriminate?
Well, sometimes it's not just, it may be the seller discriminating, but a lot of the times it might be the selling agent that's discriminating. Because the selling agent wants a smooth transaction, doesn't want any hiccups, doesn't want to, make the seller feel any way. So, sometimes you get it on both sides. But why do they discriminate? Kind of like we just said a minute ago, they're afraid of what the VA is going to come back and say. Right. I think we're kind of good in the area that we're in until you start getting in northern Riverside County or deep South San Diego. For the most part, they're very accepting of VA. However, if you are going against a person that's conventional, 20% down or something like that, most times they're probably going to pick that conventional because they're showing more quote unquote skin in the game, even though we have the VA backing us 25%, they don't see that part. So I think it's just the ignorance of it, and them not knowing that, hey, the VA is putting down 25%. In addition to, we're paying closing costs too. You just don't see my 25%, but you see their 20%. So it's just the ignorance and knowing about the VA loan. But if more people are educated, like on this podcast, they'll know.
Exactly.
Right? Yeah.
And I think that's the most important part of what we're talking about, right?
Right.
The VA loan is not a mystical type of loan that's out there. It is literally the best loan. It's just that it's there to protect and to give incentives to the veterans and service members that are currently serving because of the service that they have. Yeah. So in reality, it's in my opinion, it's the best tool out there for us to use.
Yeah, I just want to add to that. Is when somebody's coming in with 5%, 10%, 20% down, they just can't see the 25% that the veteran is putting down because the VA is back, and it's like an invisible 25, right? Yeah. And that's why sometimes it's good for the agent to, for the agent to get on the phone with the other agent and kind of explain, hey, we got 25% back in this. They're showing you the money, but they don't have to close with that money. I can show you whatever you want to see, but when it comes to the closing table, I might not be putting anything down. Yeah. I'm just kind of showing you the money up. Gotcha. Exactly. I don't even have any money. Exactly. You know, so but yeah, I just wanted to share that.
Yeah, point. But what's the difference, right? Like, what's the difference in between money down, right? Because I think that's a misconception that a lot of people have. Like, and now I promise you, this happened to me in one of my transactions. It was. I got a phone call from an agent. We put in an offer, right? And I showed the proof of funds. I think it was like $12,000, right?
Yeah.
Proof of funds for the agent.
Right.
And the agent calls me up and says like, "Hey, yeah, I'm looking at your proof of funds. What other bank accounts does your client has?"
Yeah.
And I'm like, "Oh, that's the bank account that they're gonna use for this transaction. That's their proof of funds."
Right.
And she goes like, "That's it?" I'm like, yeah, $12,000. That's all they need.
Plenty.
That's all they need to cover the closing costs. I think the house was like, $450.
Right.
So it's like that's all they need to cover the closing costs, and they want to put all the closing costs. So in good faith, they're putting all that money in the actual escrow account.
Yeah.
So and she was like, yeah, we'll see. Like they were supposed to come up with like $80,000, $100,000.
Yeah, they want $80,000, $100,000.
Yeah, you know.
Yeah.
You know, and I think that's one of the common misconceptions. So what's the difference, right, in between the money that you put in your EMD from the money that you put down on a home?
Got it. Okay, so you're talking about for VA, right?
For VA, yes.
Okay, so the money that you put in your the earnest money deposit and the money that you put down, the earnest money deposit is not money down, right? Some people will say that it's money down or use it as money down because you can write the contract like that, or you can write the contract and say, hey, this is my earnest money deposit, and use that money towards your closing costs. But typically, veterans are not putting any money down. Right. You can write it as money down, but it won't look like a whole lot compared to civilians. Exactly. So you want to just put that in as earnest money deposit, and you don't need that money down.
Got you.
Save the money. Keep the money in the bank.
Exactly. Right. And there are three things. Just so y'all know, there are three things that you can do with your EMD, okay? If you want to find out what are those three things that you can do with your EMD, leave me a comment, and I'll go ahead and DM you what are those three things that you can actually do with your EMD if you're interested in finding out more information about the earnest money deposit, okay? So I think that wraps up this podcast episode for the VA deep dive. I'm pretty sure that we will deep dive in other aspects. Right. And not only that, I will also like to do another video actually specifying. If you guys want to see that, let me know. Another podcast episode with just simply scenarios, real life scenarios that myself and Maurice or any other members of the Warriors group have actually seen. So that way you can have a better general idea of how is it that's going to benefit you based on the experiences that we've had. So please leave me a comment below, like, share, and follow for more. All right, Maurice, where can they find you?
You can find me on Instagram at Maurice the Marine Broker. You can find me on Facebook, Maurice Watkins, or you can just call me at 760-207-8719. I'm always there, always picking up. We ready. Let's go.
Awesome. And you guys know where to find me. Please, my information is down there below. I will see you guys in the next episode. Next episode, we're going to be talking about contingencies. You think we can talk about those?
I say let's do it, baby.
All right, awesome.
Let's do it, baby.
I'll see you guys in the next one.